death. Jeez, I'm weird. Um,
My God. Saved.
Saved. Yeah, this is LinkedIn saved. You know, how do I not fall victim to that? Okay, and let me find this on LinkedIn for anyone who might be bopping in. We had a technical malfunction on the LinkedIn side, but we're here, we're live. And Jarrett, what were we just talking about? We were just talking about how weird it is out there. And you said we need to start with this. And I was like, all right, we do need to start with this. So what I was getting at, and welcome Aussie.
Sorry. I had something. I had to finish something at work.
All right, no worries. So what I was saying is like all indicators, most of the normal indicators we look at for like the sky is falling economically, market wise, nearly all of those indicators are like normal or holding steady. There's no real drama out there. But when I'm out there with small business owners, they are mortified. I was just telling Jarrett, like, we were having to modify some things in my business because we've noticed revenues dip and we're trying to get ahead of it. And people aren't paying the same for a website. So I guess I'm just opening with that today and asking you guys, is it weird out there to you?
It is weird out here for me. I'll go back to the story of I just put an offer in on a house. And this house, you know, it needs a lot of work, but in the housing market, it's pretty, you know, it's in a decent area. It's been sitting on the market since July, and
July,
despite multiple price reductions, I'm the first person to put in an offer on the house. Wow. And so and even then I felt comfortable offering way below asking.
Like,
and
I've never heard of another human going as low as you went. Do you feel comfortable saying publicly? Percentage-wise?
Percentage-wise, I went I offered a little bit more than half of their asking price.
I have never in my years of real estate have heard of someone going, yeah, I kind of like it, but I'll take half. And what was the response? Loosely, again, paraphrase, whatever. What was the response?
I mean, they were disappointed in the offer, but at the same time, they haven't just straight up rejected the offer either.
They said, we were disappointed in the offer, but they didn't do an immediate no. I mean, out the gate, right? Like if someone came at me and was like, you're asking 300? 150. No. And leave the room, right? Like leave the room. You can't even come back to bat, but they're like, no, we'll come back to you, you know?
Aussie is, he's negotiating like he's from the Caribbean, and I like it. You know?
Yeah, man, I'm here.
You're like, the coconut's 5. He's like, it's 2.5. let's peel this one back. Also, Tristan says, baller, taking that PBD offer strategy. I don't know what that means, and I hope I didn't just swear on air.
Patrick Bet David, probably, right? Isn't that a PBD? Like that's who I know. Patrick Bet David is a speaker, right? Like, so I think he just goes for it. Yeah, I think that's his negotiating technique. Maybe Tristan, maybe that's what it is. So I guess, I mean, my question stands, Jarrett, is life just normal watching the Colombian peso depreciate and you feel like a god living in your ivory tower in Bogota?
Jeez, you really just TLDR'd my life. Yeah, I mean, you know, between the last episode and this episode, I'm 12% richer. So that feels great.
Just because of inflation.
Yeah, just because inflation and the way I have things set up here, I pay my rent in US dollars based on a Colombian peso price. So today I actually have to pay my rent, so it'll be cheaper than if I had paid it a week ago by around 10 to 12%. Allison says, I could imagine their response. The thing is, I don't know if we can, because Aussie says that they didn't straight up just reject them. And the thing is, I took the real estate course because I wanted to be a realtor, and I still eventually one day want to pass that, just so if I ever sell real estate, I can just save a bunch of money. And the thing about this was like the greatest thing. It was on the test. It was like, how much does real estate cost, right? How much does a house cost? And the answer is whatever price the buyer and the seller agree on. That's it. It doesn't even matter if the market says this house is 500K. If the buyer and the seller agree that it's 300K, guess what? That's where it's getting sold at. The buyer and seller agree that it's 750. Guess what? That's what it's getting sold at. And that's where real estate is a really great opportunity to make money, because it really comes down. It's beyond market forces. Sentiment plays a role. There's an emotional thing. It's not just a logical thing. Like, I'm not going to pay, for example, 25,000. Like, no one's going to sell me Bitcoin right now for 25,000.
No.
Nor would I pay 30,000. We're going to probably get within a percentage point of what the price is on, like, you know, the global average exchange, probably looking at coin market cap. But that's what real estate is, a really unique thing. And real estate are all non-fungible, which is really cool. There's no two pieces of real estate that are the exact same. True. Even if you have a duplex, the way the sun can hit the building on like one side could be different. If there's wind, it could be different. Maybe the parking space on that side of the house is just a little bit different. So that's where real estate is really very interesting. And if Jacki were here, she would go right into her tokenization rant.
Tokenize.
Tokenize everything. Tristan says, Patrick Bet David talks about offer stupid low because worst case scenario they say no. I don't think it's a bad thing. I just had friends visiting here from the States, visiting Colombia, and we were talking about my negotiating tactics, and they can get kind of crazy because we were down in like the market buying stuff, and it's like they'll be like 10, and I'll be like 7, and what I really want is 8, right? But I'm trying to throw them a bone. Yeah. And if they don't budge, I just told them the hardest thing, all you have to do is just turn around and walk away. And if they don't call out for you, it's a win because you didn't want to pay that price anyways. And if they do, then you got the price that you wanted. So there's actually no loss in really hamstringing people with negotiations. Oh, yeah. If people really do have value, they're not going to drop it. And then they're just going to say, hey, thanks so much. I know what my value is. Go ahead. Allison says, I guess it depends how much they bought it for. And if they picked it up for 50 to 100K, it's still 3X. Yeah, I mean, Aussie, that's crazy, the real estate you get up there. Like, you can't even redo your bathroom in Massachusetts for under 80,000, and that's not hyperbole. So, like, I want to be in your real estate world.
Yeah, it's interesting. I mean, the offer that I was able to put on the house is because the house, I could either literally tear down the house or sink a couple $100,000 into it. So there's parts of my market that I'm able to. I think you're able to negotiate more on these houses that need work now because the interest rates are so high that it's actually pretty prohibitive to borrow for rehabs and things like that. And so I think you can negotiate a hell of a lot more now. And I think that's maybe one of the upsides of this market is a lot of people are priced out.
Oh yeah. But I don't, I talk to a lot of, whenever I get the chance, I talk to a lot of real estate investors. And this weekend I was at an event and I was able to talk to several investors. And I asked all of them. One of them has one of the highest performing Keller Williams in the world. And in terms of listings and transaction volume and all that sort of stuff. And they were saying they do not expect prices to budge at all. Now, what about interest rates? Oh, great, interest rates. But interest rates don't do that much when you're looking at a price that is unheard of for the same property 10 years ago. Allison says, we're looking around London and literally 800 gets you not very much. I'm moving to Canada.
And that's 800 pounds, right? That's about 900.
Is this rent? Is it 800K or 800 pounds?
Yeah, right. Because if it's 800K for an apartment, man, but if it's 800 for rent, that's pretty cheap relatively to things in like the States.
Yeah, I mean, I'm paying $1,000 in rent for my 2-bedroom place here, so that's probably based on conversion pretty close. And I'm like way out in the boonies. I'm way out in the boonies, kind of thing. So, okay, 800,000. Yeah, okay.
800,000 pounds sterling, which in dollars is like $75 billion. So.
I think your metric to imperial system is pretty good there. I think you're doing.
I think that was good. Thank you. My mental math was solid there.
And then you had a post which I'm actually going to share here. The speaking of wild real estate value, or you found this post on Instagram. I'm going to pull this link while we're chatting about this, just because it's immediately relevant. 600,000 for a place in Medellin. Let me.
It's unbelievable. If you can actually do a screen share of that live. That would be amazing. So I have friends who just came down, and the Colombian, if you're here for crypto and NFTs and Bitcoin Maxiism and Ethereum failing and all that, welcome. We will eventually get there. We're going to run through some real estate really quickly here. I have friends visiting, and after day one, they were both like, how do we get remote jobs and move here? We've seen the light. We want to do this. We're getting ready. But this is a video of a home that is probably about 30, 40 minutes outside of Medellin Centre, like the center. And it goes for $600K US, and it's just renobulous. The thing about Medellin that's beautiful is all year round, it's like spring. It's just perfect weather all year round. And
oh wow.
So this apartment is obviously massive and lavish, and it's for $600K. And I've seen places like I've seen penthouses in Bogota that are that's gonna be hard for me to put the square meters into feet right now.
Yeah.
But we're talking like, so this is the beginning of it. So we're talking, 3-bedroom, 2-bath, expansive, maybe even a terrace, and you're maybe looking at $300K, maybe 250, maybe. And it's one of like the nicer premier cities in most of the Americas. So it's definitely my long-term thing. Like I don't really see another way, but where was I going? So my friends came down and they loved it. And now they're both like, how do we work here? How do we stay here? Like we want to do that. And Colombia's come out with an actual digital nomad visa, which is interesting. And the Colombian tourist slogan is probably the best one on the planet, because for so many years, people, especially in the United States, just think Colombia is just like, there's just like shootouts at every corner. It's the dangerous place on the planet. And like, because they've watched too much Narcos and like, actually never visited. And the slogan is the best. It is the only risk is wanting to stay. And I've yet to meet a person who's come down here who doesn't like want to spend more time.
Your only risk in coming down is that
the only risk
you're
going to want to stay.
Oh, that's great.
It's brilliant. It's brilliant. So
that's very good marketing.
That's hilarious. Go ahead.
Allison, that $800K, that's like, just to give you guys an idea, that's 1.33 million Canadian. And so probably you're talking 1.5, 1.6 million US.
No, less. It'd be less.
No.
Like 1.1.
No.
I mean, there is Google, people.
Oh, yeah, 1.1. You're right.
Yeah. You went up, you went to go down. Yeah. Which is ridiculous. And honestly, that reflects Massachusetts prices. Massachusetts, New York, Philadelphia, the entire Northeast is just so expensive. Felt the same with Panama. And Jarrett, I'll be in Medellin in 4 weeks. Ayo, I like how he says 4 weeks and not a month. That's so specific.
That is very unique. Yeah, maybe it's a Monaco thing. I don't know. Hasn't he been in Monaco? Like Tristan, where are you? That's like that. That's
maybe Tristan's just an AI bot. None
Maybe.
of us have actually met him.
He is. He's an avatar, and I think he'd be fine with that. Actually,
it's efficient. It's efficient.
It is efficient.
Now let's talk about, we're talking about ridiculous metrics and what's going on. Let's pivot to crypto, because we are the Not Crypto Bros, and dive into some of the kind of crazy metrics out there.
Are we talking about ETH? Are we talking about what are we talking about first?
Let's start with ETH. I mean, ETH is,
what the hell?
What the hell is going on with ETH? There's a million things going on with ETH.
Okay, let's start it down.
Let's start down the crazy road of numbers. ETH Futures ETFs got approved 2-3 weeks ago.
Oh yeah.
They launched last week. In their first week, they launched last week with 6
the futures.
The
futures.
6 different futures ETH ETFs. So 6 different products from 6 different brokerages offering ETH Futures ETFs.
Holy, I didn't know they went live.
Yeah, they went live last week.
Okay. So therefore what?
Well, this is the interesting thing. Therefore nothing. Because they in that 1 week, they accumulated only 20 million in assets under management, which
that's like one investor. Like
that's nothing. It is absolutely nothing, especially when you consider the fact that this is in October of 2021, so we've got to compare the times in the cycle. But when the Bitcoin futures ETFs launched, in their first week, they did $1 billion in assets under management. So you're talking about, even though we're in the fact that we're in a bit of a bear market, 50x less investment into an ETH Futures ETF.
Tristan was the one investor.
Yeah.
So, okay. So, I mean, it's tragic, but how do we not just chalk this up to the retail, the TradFi investors just aren't familiar, right? Like none of our DeFi degens people made the migration to an ETF. Like they're keeping their money where it's at, and on the hopes that an ETF rallies the price. So, what, Jarrett?
Tristan said it was me.
I told
He was
you
the
that.
one.
Yeah.
Yeah.
Yeah. So like, what else are we seeing that's driving? But the price is down, and it's down pretty well. It's been stable generally. So this I would call down hard.
Yeah, it's down 1% today. It's down it's down from 1732 less than a week ago, or just over a week ago now. It's not looking pretty. And the fact is that I'm not really concerned about you and I getting into that futures ETF. This was the first time that institutional players could get into an ETH future, could get exposure to ETH futures ETFs. And it shows that there's no appetite for that kind of product, that they aren't actually interested in ETH or in the ability to hold ETH within their portfolio, because we're not seeing that adoption. Whereas even though there was willingness to pass them and different firms wanted to be able to offer them, there's no appetite. Whereas with Bitcoin, there was a very clear appetite right from the get-go in 2021. So what does this say about ETH's potential price in the next little while, and the sustainability or the institutional interest in ETH moving forward? A lot of people have said that, ETH could actually attract more interest than Bitcoin over time, because you can do valuation models and it fits that standard narrative. But based on this at least 1 week of evidence, we're not seeing that.
I mean, again, like there's no appetite amongst a new market where we didn't think there was much appetite.
Well, we thought there was appetite. That's the thing. Everyone thought that there was institutional appetite for ETH futures ETFs. Otherwise, they wouldn't have had 6 firms apply for one. And we would have they wouldn't have applied for one if they didn't have clients asking for it.
Are they reputable? What's the company that launched the?
Well, there's different ones. Van Eck, ProShare, iShares, I think. They were reputable firms. They were some of the first to launch the Bitcoin futures ETFs in 2021. So it's not BlackRock or Fidelity, but it's not some tiny little firm either.
So that is nutty. And so when you say institutions, the projection was that institutions have an appetite. I mean, are we just talking about big companies, traditional companies? Like, why didn't Walmart buy up a ton? Is that what you're getting at?
Well, either hedge funds, Walmarts, or institutions that have wanted to add it to their exposure. They don't have traditional access, or even high net worth individuals who can't necessarily onboard 100 million onto Coinbase. So I think that's kind of what I'm getting at.
Tristan says BlackRock is launching the Ukraine ETF right now. ETH will come after, which is interesting. I haven't heard of the Ukraine ETF. That's wild. That's worth looking up. Allison says Tristan can imagine, but that pension fund managers are bringing it forward is good. But that two major pension funds, bringing it forward even as an option for the boards to shoot down. So, okay, so therefore what? I mean, is this just a slight depression, or are you, Aussie, expecting a major dip?
I'm expecting there to be some price action negative on ETH. I mean, this is one of several kind of negative pieces of news that are building up against ETH over the last, I'd say 2 to 3 weeks now.
Oh, okay, Tristan. He says 100% a joke since they're rebuilding the country from the ground up. Got it. Okay, might as well be the Ukraine ETF. Got it. Understood. I feel that.
So
go ahead.
This is not the only kind of, this is like just the start of a building block of what's negative stories for ETH. What do you got, Grant? Well, you're looking very fresh today.
Yeah, he's looking like Tom Cruise from Dirty Dancing. I'm not
What?
convinced he even has pants on. He's just flying around.
Let's see.
No, sorry, not Dirty Dancing. What's it? Risky Business. You know that scene? Where
Yeah. I think it's Risky Business, isn't
Risky.
it?
Sorry, that was that was Swayze in Dirty Dancing. Grant, nice pants, guy.
Thank you. Well, I don't know. So these guys know, for the public, like, I've been like quiet in the chat quite a bit, and me and Jarrett opened a little bit with this, but I've had to keep focus on my Web 2 business. It's weird out there, and that's why we're talking about what we're talking about. Like, what do people find confidence in? So I've got to focus on stabilizing. I don't think that there's any indication that the market is going to tank. I don't think there's any indication that the market is going to rally. Like, I predict a sideways market for some time, but I'm looking fresh because I'm trying a new thing. Meaning, I'm trying to be present in IRL where and when relevant. Meaning, I'm seeing, it's weird where we're seeing ROI now. I basically is what I'm experimenting with. Where do I actually see real ROI other than what in marketing we call vanity metrics? How many followers do you have? Vanity metrics. Are the followers converting? How many, what are your impressions? Vanity metrics. How are those impressions converting? What's really getting you clicks or not clicks, but like buys and conversions? And so for me, like honestly, I'm looking at crypto and I'm going, I don't know if they're going to survive the ETFication of, at least not alts are going to survive the ETFication of the TradFi-cation of a lot of crypto. I don't know if they'll survive it because you're right, Aussie. It is revealing, it's revealing that maybe the appetite, there is an appetite for crypto, but for those who had the appetite, they're in crypto, in DeFi. They're on Coinbase. They're doing direct swaps and direct trades. And like, why do we need an ETF? Is now the running question. I'm wondering, how does this affect Bitcoin ETF launches?
Well, interesting you bring that up because ex-BlackRock directors were all part of this big summit that was happening in London, I believe, last week. And they all said that Bitcoin ETFs were 3 to 6 months away.
Okay.
And there was another very interesting comment that they made, and I'm trying to make sure I quote them correctly so that I don't butcher this. But they seem to suggest that there was more of an appetite for Bitcoin than there was for ETH in terms of ETF interest at the moment. They think that the Grayscale will definitely be converted into an ETF, and they believe that spot inflows will be somewhere around 150 to 200 billion over the first 3 years, which would double or triple the amount of assets under management in current Bitcoin products outside of Bitcoin.
Is this all just engineered?
No, I think
what all just engineered?
These pricing games. Like, the longer I go, the more I feel like they're trying to make crypto a completely manipulatable asset in terms of pricing. Jarrett, like, you were commenting on real estate earlier, and real estate is manipulatable, obviously, with the interest rates, hands down. And it's not so easy to manipulate price because price is a supply issue, and there's so many sources of supply. I know there's a big myth out there about, how many properties BlackRock owns. They're buying up. They're trying to make everyone renters not own anything. But if you actually look at the percentages, it's like less than 1% of actual property. So when you look at pricing, people are doing the Wild West out there, like Aussie, offering half the market rate, and some people are biting, some people are not. There's more elasticity to price in real estate and in your own business. And so right now, as crypto has made a very slow slog towards ETFs, and by slow I mean this, we know that in the crypto winter that started 2017, 2018, the actual winter then, or the dip, that was largely in reflection engineered. Big tech came in and shut down all ads. Big tech came in and shut down, like Jarrett, you've been talking about how some of your stuff has been blocked from being posted that's labeled Bitcoin or what have you. And I'll let you talk more about that in a second. But back then, we had created a course called the Smart Crypto Coach, and spent a coin making this phenomenal course. It was a phenomenal course. And as soon as we launched, all ads, we couldn't do any paid ads at all. And then we couldn't open accounts. And so when I say it was engineered, I mean all conduits of communication about crypto products and crypto services were being blocked. So we know that in hindsight that happened. Then what happened is a lot of the institutions, and by institutions I mean big companies, came in and started their own blockchain development arms. Like Walmart is the big one I'm thinking of. They have the largest internal blockchain arm because they were almost put out of business entirely by Amazon. And they've been on the ropes since. And they're not going to get blindsided again. And there are hundreds, if not thousands, of traditional companies that have already started focusing on blockchain, developing their own blockchain solutions and interoperability. So they've been working on it for 5 years, 6 years. 5 or 6 years. And meanwhile, these ETFs and traditional finance and instruments for the public to trade have been delayed and delayed and delayed. And now we're getting them. What, Aussie?
See, I hear your diatribe and what's going on here.
But let me just have a stank face and get you to stop.
Yeah, because I'm gonna give you gold. Everyone's favorite Bitcoin example. Gold has been traded for hundreds upon hundreds of years, thousands of years. Gold first got its first ETF somewhere around 2004. The BlackRock ETF on gold was in 2004-ish. It was 1,000-year-old product, over 1,000-year-old product at the time.
Okay.
Bitcoin's 13 years old.
Mm-hmm.
Bitcoin is a very, very new product compared to most things that get an ETF.
Yeah.
So I don't necessarily know that they're dragging their feet. I think dragging their feet is a very interesting way to put it, because in some ways you could say it's due diligence, because it was a 13-year-old product, and now it's a 13-year-old product, but they are pushing pretty hard to have it approved after only 13 years. Whereas gold, no one pushed for an ETF on gold until 2004, after it was maybe been traded for 2,000 years. So I think that there's maybe not as big of a, hey, have they been dragging their feet? Is price manipulated? 100%. Price is manipulated by liquidity. It's manipulated by how much does the Fed printing? All these macro factors that impact not only the stock market, they impact crypto because it's a risk-on asset even more. So yes, price is manipulated, and yes, as you know, companies can kind of manipulate the price. I mean, BlackRock is a shareholder in the 5 biggest crypto Bitcoin mining companies, and so I'm sure BlackRock might have a say in how much Bitcoin they sell as part of them paying for their profits and making sure they keep their operation going. Because if BlackRock doesn't want the Bitcoin sold, BlackRock could float them a loan, or if they want the Bitcoin sold, they could push them hard to sell the Bitcoin to drive the price down. 100%, that is a thing that could happen. and is probably happening, and that's not a big deal. I think the ETFs aren't going to change that.
I don't think it's a big deal. I think I'm not saying like this grand conspiracy. I'm saying it's not a big deal. That's par for the course. And therefore, what? Therefore, when I say dragging their feet, also like, okay, relative to gold, you mean relative to before we had all the digitization methods to accelerate something going on to ETFs? Like, relative to the digitization age itself, this is feet dragging. By feet dragging, I mean they're positioning, and they're positioning themselves to be able to treat this like a commodity. And here's my thing. Like, I think there's a huge reckoning, maybe not for everybody, but inside of me, about crypto as a better investment than real estate. They're like Bitcoin being the exception, for all the obvious reasons. It's starting to be treated more and more like the darling. So not just because of its tech, not just because of maxi reasons, but because of the messaging I feel like I'm hearing from a lot of the institutions. I think there will be a special place for Bitcoin. I think they're positioning for that. So when I talk about this feet dragging, all I'm getting at is you better be about your business, because there's going to be very few 1000x home runs left.
Oh, I 100% think that their altcoins, I think we're in store for an altcoin reckoning in terms of there's over 3,000 altcoins right now. And I think going into the next bull market, there's probably going to be 1,500 that are really actively traded, or maybe even 1,000. I think we're going to see a massive reckoning. This is why I'm talking about all of the things that are going on with ETH. One thing that's interesting is ETH actually, as a company, or the ETH Foundation, has reached the something billion in revenue mark, 10 billion in revenue mark, faster than Facebook, faster than Microsoft, and ETH is
Well, hopefully
even
they
younger.
haven't kept it in ETH, because
They've been slowly cashing stuff out. They've been, I mean,
Sure.
they just sold another $2 million worth of ETH a couple days ago. The foundation slowly cashes out. They hold and they cash out at times. So really, I do agree with you that there's not maybe as many 1000x's left out there. But I do still think that there's still some 1000x's out there. I just think right this exact moment is not the right time. We can go into the ETH Bitcoin valuation chart and all the altcoins compared to their Bitcoin chart right now, and I can tell you there are very few that are beating Bitcoin this year, and many of them are making new lows against Bitcoin this year.
New lows against Bitcoin. Yeah, wow. I believe that.
And that always happens like in the year pre-halving, and we still haven't flushed all the altcoins out to see which ones will actually survive and be players in the next bull market. And so ETH right now is feeling that pain, and ETH will lead that charge down. ETH, and that's why I'm talking about all of these kind of negative factors. I mean, ETH transaction fees are at their lowest since November of 2022, when we had FTX just happen and network activity was at an all-time low.
All-time low.
Well, close to an all-time low in terms of
Really?
this bull bear market. So ETH transactions are at massive lows for this market, for this bull market and bear market cycle.
Now that's interesting. Has development on like dApps, it'd be an interesting statistic, is how many dApp Git pushes have happened on GitHub. How many commits? Basically, when someone has a development, you can see a flow, like a volume flow on a chart. You can see the volume. I wonder how commits are happening. Are we seeing these all-time low transactions? They're not jumping over to Solana. We're not seeing like a spike over at other networks.
No, the argument right now is partially that the L2. The one argument that I would say in favor of ETH is it means that the L2 layering and scaling is working, because L2s pack those transactions together into singular transactions on the ETH blockchain. And therefore, if fees are coming down, it's probably because usage on L2s is up, and it has been in general up, and that people are building in those L2s that are helping ETH scale. But that doesn't stop ETH from having these low transactions. It doesn't stop ETH from going inflationary again. It doesn't stop the fact that there hasn't been appetite for ETH on institutional ETFs. There hasn't been appetite for ETH in terms of its ETH Bitcoin chart. And so I'm seeing, I don't think ETH is dying. That's what I said in our chat, as I said, ETH is dying. It's not dying, but it's getting ready for its reckoning, and reviewing, and everybody getting back in line with what the valuation looks like.
Man, so go ahead, Jarrett. Go ahead.
Yeah, well, I've got a couple things to say. One, I think a future ETF in this time of the market tells us nothing about ETH. It also does nothing about
future versus a spot. That's a good point.
Yeah, it tells us nothing about institutional appetite for ETH. I think it's actually fairly high. I just think that people don't want to take loans out in fiat to buy assets right now because the percentage points are so high and it seems uncertain. If it was a 0% interest world, then yeah, they might, go out and get a loan to buy some ETH even in the future. The other thing, Grant, I thought Ossie's point was really great that we've had gold for thousands of years and we've used that as a mechanism to trade value, but it took till 2004. And what I was thinking about that is that derivatives started in the late 80s, early 90s in financial markets. And then really the advent of the internet really kicked in the late 90s, where people, at least in the United States, started to have a computer in one in every 3 homes. And then by, early 2000s, there were computers in many homes. Definitely by the end of the 2000s, most households in the United States had a computer. So the appetite for an ETF to get it into a retail market was just, it kind of all came together at once. I think if we had the digitization of our financial products and our financial world in the 1960s, we probably would have had a gold ETF in the 1970s or 1980s.
Yeah.
And that's where but I go back and forth. It's are we rushing to an ETF for Bitcoin? That wasn't on my bingo card for this year, honestly. But now it's very much going to be, it's a when, not an if, whether it's BlackRock or Fidelity. And it's yet to be seen how that's going to play out and how it's going to affect the market, how it's going to affect hash rate. I know at Compass, we're constantly just always talking about hash rate. What's the global hash? How much of that do we control? How much of that, we're interested in that. New miners are coming out that are going to be more efficient. That's really the game. And the Fidelity put out this PDF, and I can share it. It's called Bitcoin First Revisited, and it basically this is what the cover says. It says why investors need to consider Bitcoin separately from other digital assets. And I haven't read through all of it. I'm going to be posting it tomorrow on Compass's channels, though. But basically, it's this is the thing. This is the signal amongst the noise. If you're an investor. This is an actual investment. This is good. This is an actual commodity. I think ETH is too now, to be fair. But this is a thing. Everything else is a security. Everything else is kind of a gamble. And that's just really how I start to feel now about most things. I actually know a good amount of maxis that have a good amount of ETH, myself included, just because we got into ETH and we never sold. And now we're just in our hodl mode. And we're well, we're not going to sell it now. We'll see what happens, But I do know most people are looking to, and myself included, when that ETH does go up to a price point, to sell it. And looking at the ETH Bitcoin relationship right now, normally ETH and Bitcoin sits around 8 to 12%. That's historically what it has. Right now, it's around 6%. So it's definitely dropped off compared to its normal peg to Bitcoin, from the ETH to Bitcoin. And in the last 7 days, according to CoinMarketCap, Ethereum has dropped about 6%, while Bitcoin's up almost 0.25%. So Bitcoin is really kind of stable in its price over the last week, whereas ETH has definitely taken a hit for probably a myriad of reasons. And there's also probably other things that we just don't, news that we're just not aware of, right? There's so much news in this sector that could affect this. I do think, however, moving forward, the relationship between physical energy and digital money is really at the backbone of Bitcoin. And I do think ETH going off proof of work was a huge flaw in their security system and how the blockchain basically, operates and people's relationship to it.
So that's super interesting. I'm going to tap on 3 things that you just said. first, Bitcoin hash rate has just hit a new all-time high for the 7-day hash rate. So we're definitely seeing more and more miners come online, which, interestingly enough, whenever the log of the hash rate and the log of the price of Bitcoin touch, it's generally a signal of the top in terms of the market. And right now they're not anywhere close. And so that's quite interesting. So whenever the price comes up and meets the hash rate and usually bumps up over the hash rate a little bit, this actually generally signals the top in the market, which is very interesting. And we're continuing to see hash rate climb. So Bitcoin price will overall need to climb to match that. In terms of other factors, I mean, ETH has gone inflationary. They're printing somewhere around 1,200 ETH per day between burning and with their minting and rewards. So this has happened in the last, it started a month ago, but it's gotten more serious in the last 2 weeks, where they're expecting that we'll probably print somewhere around 30,000 new ETH this month compared to what we actually would be burning. So this is going to have that's potentially having an impact on the price right now and why it's dropping. And then finally, JP Morgan actually shared your opinion about the move to proof of stake, bringing more centralization to Ethereum. And there's something that with the new liquid staking providers that actually is making that risk even greater. But I'll let Grant, who seems to have a point brewing, hop in first.
No, just a question. I thought the whole proof of stake and burn mechanism concept was to make it deflationary. But there's a reward system that's making it inflationary?
So right now, what happens is ETH from transaction fees, a portion of ETH from transaction fees is burned.
Yeah.
But stakers are rewarded at a fixed percentage. Although that percentage has dropped, it used to be close to 7. It's now somewhere around 5.5%. That changes. And usually, and for when we first moved to proof of stake and started the burns, the rate of burning was above the rate of minting. So there was enough transactions every day, and the transaction fees were high enough that we were burning more ETH from those transactions than what we were printing in rewards. But right now, because transaction volumes are low and fees are low, we're actually printing more ETH than we're burning from those transaction fees.
This is painting a picture of, as we're entering this new era, and I do want to hang a question out there that maybe we'll get to by the end of the show, maybe not. So let me just hang this question. We don't have to answer it now. Why, it's just now occurring to me, why any ETF would affect the price of Ethereum. We'll get to that in a second. But this is painting a sentiment to me of less predictability than when it was the Wild West. To me, these moves and these changes, it's revealing. Sorry, my Google thing. Thank you.
Stop buying ETH. Buy Bitcoin.
Yeah, shut your face and using trigger words. It seems to me that it is revealing flaws in the ecosystem, except for Bitcoin, which is just nutty. But it's revealing flaws in the system that it's almost like no one had real foresight on until we got into it. And now that we're into it, these things make me sketch. Like
what specifically? Because Aussie laid out some good stuff there.
He did. I mean, like the fact that when we went to their burn mechanism in ETH, I remember when that happened. I remember when we went to proof of stake, and it was like a series of releases that happened over about an 18-month period. And this was the message was this was going to make ETH deflationary. And it was the new deflationary asset. And my question is, wait, did no one do the maths at some point that this could then turn around and become inflationary? And it's like, well, no, we did the maths, but so that flaw of like, who's watching the back door, so to speak. And so it's like, why are we saying this but getting this? And then if the ETFs are actually affecting price this way, it's like, wait a minute. So like traditionally, how do ETFs affect the price of the underlying asset? And then specifically with ETH, how does that work?
So with gold, and I think we talked about this a couple episodes ago, there was a image that was floating around Twitter, and it was saying that I think in the first couple quarters when the ETF dropped for gold, it like double or tripled the price, because in order to back the ETF, they had to actually physically go out and buy gold.
Yeah.
And so the demand basically just shot up. And I think we would see the similar thing. And once again, I'm not sure how it would work with ETH, but as far as how it works with Bitcoin, BlackRock, if they have sold 100 billion of ETF, they would have to have 100 billion of Bitcoin stored away. At least, if $100 comes in, they need to be able to have $100 of Bitcoin to back it. And then as that appreciates, obviously it's good. It's good for everybody, to be fair. That's how I understand it to be. I think it's fairly simple. And that's where when Aussie talks about, 100 to 200 billion coming in over the first couple of years, I actually think it will be 100 to 200 billion in the first 12 months, depending on the timing of when the ETF is dropped, and the overall market sentiment and where interest rates are. Because if we look ahead, right, the halving is 27 weeks out from this Friday, within a give or take 3 to 5 days, right, depending on hash rate, depending on other things being equal. And then that puts us in mid-March. Sorry, that puts us in April or May, but probably late April. We may also, by that time, have an ETF. This is what we've been talking about in the chat, right? We may also have the ETF. The halving will happen. And we may also get some kind of a money printing and a lower interest rate, right? Which is another, in some sense, form of money printing, as it incentivizes people to leverage debt to buy assets or, do stuff that they want to do. So that's where it shapes up, where I think that, like, if the ETF were to drop next summer, even, which is a little bit farther down the line, but the halving's happened, the interest rates are coming down, and maybe there's some kind of money printing that Biden has to do. That's where, like, over that next year, as we get maybe into a bull run and things get a little bit more positive, because we've been talking, okay, like the market's weird. That's where I think like 100 billion plus could easily come into an ETF
of Bitcoin.
I'm just talking about Bitcoin. Yeah, let me be specific. I'm just talking about Bitcoin, because the other thing is, like, $100 billion isn't a lot of money compared to all the money that's out there, and the fact that the Fed can print unlimited amounts of money. So,
well, I feel like I think the powers that be, there's a correlation between censorship and what people are trying to control. And by control, I don't necessarily mean limit. I mean benefit from the fact that they control it. So my thinking is this. When I think about Bitcoin, we just saw there's a correlation to me and the shutdown of Instagram accounts around Bitcoin and the powers that be. To me, that is an indicator of the value of Bitcoin, because they're trying to position themselves. They're trying to slow their roll. When was the last time you saw an Instagram account post? Oh, they wouldn't let me post about Ethereum or Shiba Inu. Like, it's like, no, don't care. Like, and even I'm looking right here. It says we restrict certain activity to protect the community. If they were protecting the community with this censorship, they'd be like, okay, no more Pepe coin discussions. What are we talking about here? No more SNCC discussions, right? But like, we would maybe let Bitcoin communicate.
Hex only, baby.
Hex only. And so, but I mean, they can't account for everything. They can't go through coin market cap and add all the ticker symbols and go, hey, let's block all of this, I guess. I mean, theoretically they could. But to me, that's a green flag for Bitcoin. All of these changes happening to Ethereum right now are, to me, massive red flags in my personal confidence this afternoon. This conversation has got me like, I need to go read some headlines, because, I've already sold some real estate or it's in the process of being sold because we're consolidating. But this has got me concerned. I'm well above my dollar cost average because I've just been in so long. But, and I don't know about you guys, but like, I'm doing pretty good on my DCA. And if what we're saying is true about all things crypto less Bitcoin, then I might have to adjust some profit taking ASAP.
So, okay, I want to say one thing, because I think that the statements that we're talking about ETH in terms of why ETH is inflationary right now, that is a short-term issue. Right now, we're getting bear market signals in terms of we're in the boring phase of the market. We're seeing some liquidity dry up, and we're probably I do think altcoins will drop in the next 3 months, but these ex-BlackRock directors are expecting approval in 3 to 6 months on the ETF. So that puts them perfectly on my January. On the short end, it puts them perfectly at my January approval date. They expect all ETFs to be approved at the same time because they don't think that the SEC wants to get themselves involved in giving anyone a competitive advantage and getting sued for it. So I'm really looking at a three-month scenario where we're already seeing the media prime us for the fact that we are going to see a pivot. We'll probably see money printing in the next 3 to 6 months.
Wow.
So yeah, go Jarrett.
Yeah. That'd be great. First of all, for anyone that's been DCAing, also not financial advice, but seriously think about it.
But I'm doing it.
Yeah, but I'll tell you what I'm doing, man. What tells you that there's going to be printing? And I say that because normally there's not printing when interest rates are so high. Like it's kind of like, it's like, being at the gym on the treadmill and eating a Big Mac. It doesn't really make sense. It's like, okay, what are we doing here? What's the mission?
So this is where I think there's some very interesting messaging going on from media and from the government in the U.S. especially, but it has to do with the conflicts that are going on in the world. So even before what's happened between Israel and Palestine, in the last 2 to 3 weeks, I've been seeing a lot of media about the fact that military reserves of ammunition and other military products that are necessary to continue supporting Ukraine but guaranteeing the defense of the US and other countries are running dangerously low, or they're running low, and they're concerned about how much they'll be able to continue to provide Ukraine. And what we know about how that's going to happen is they're talking about, well, we're going to have to up production. They're talking about low supply right now. They haven't necessarily started talking about upping production, although a few articles have kind of hinted that there's been incentives. They're talking about incentives for defense contractors to start upping production. And that is likely to lead to a money printing event. And Jarrett, you seem to be chomping at the mic right now.
Yeah. So I shared this in the chat that we have, but I wanted to just, I'm going to probably read it out. It's a little long, but it's from Anthony Pompliano. It says, war breaks out somewhere in the world. Then there's an arrow. Other nations ask the U.S. for weapons and money. Arrow. U.S. gives it to other nations. Arrow. U.S. begins to run low on weapons and money. Arrow. More war breaks out globally because U.S. is weak. Arrow. Other nations ask U.S. for weapons and money. Arrow. Cycle repeats. And he says, as the U.S. gets weaker and the world becomes more chaotic, we being the United States, will be forced to increase our national debt at a furious pace in order to pay for all the weapons and money we are giving everyone else. You are watching a global chess game between superpowers. China and others never have to even enter into direct conflict with the U.S. to secure victory if they can simply watch us bleed ourselves dry. And then the biggest comment that Pompliano responded to, which I loved, which is like, we in the U.S. literally spend $800 billion plus a year on defense, more than the 2nd through 10th countries combined.
Wow.
And if there were another Bitcoin maxi here who could speak on this, and I don't want to Bitcoin maxi you boys to death today, but one of the biggest things that Jack Dorsey talks about when he talks about Bitcoin, and he really gets into like a philosophic vibe, is that if you make it impossible, if you can't print money to create war, then you stop having wars. Because on a hard money system, the people are really going to push back, right? But in this inflationary fiat money system, the people may not see it because inflation takes, it's the slow knife, right? It's the idea of the frog in the water, even though apparently that's not true. But, people won't revolt as much. Whereas if you're like, okay, we can either go to war, or you guys can send, or you get free lunches at school. right, then there's going to be an issue. And on a hard money system or Bitcoin, where you can't just go print money out of thin air, that's where you actually have to have more of like a democratic process about what we want to do with our resources. But as long as the US can continue to print money, they're just going to be able to prop up war around the world and come to the rescue. And I mean, that's post World War II has been what we've done. We are the big stick on the neighborhood, and we've had to put out fires around the globe, whether we want to or not. We feel like we have to. If there's a bully, we feel like we need to step in. And this new Israel and Palestine situation has been tough to watch because it's something that's been boiling for decades. And it's been tough for me personally to watch as someone who's in IR, who has friends and people, in the Gaza Strip. And then all of a sudden, everyone on Instagram is just like, stand for Israel, stand for Palestine. I'm like, you didn't care about this a week ago. You couldn't even put these places on a map. You know nothing about the history. And so it feels really performative right now. And that's, I guess, where I'm going to leave that on that conversation. But going back to what Aussie's talking about the ammunition running dry, for example, powder running dry, there's not really an easy way out of this. And the one thing I will say is that if the U.S. actually had to pay its debt, the U.S. would be as poor, and using air quotes, as probably 150 other countries in the world if we think about like poverty lines and stuff. Most other countries are just hamstringed and they have to pay money back to Europe, now China, or the U.S. at an exorbitant rate that they can't do it. So their currencies devalue as they try to print more money to solve the problem, but they're pegged to the dollar. That is happening all over Latin America, and it's going to continue to happen. And that's my pitch for Bitcoin. But the great part about this episode 100, is you guys have been doing the Lord's work out here for Maxiism, and I love it. So thank you. Thank you so much.
So I will add a couple more things. The other thing that I've been noticing is I watch CME in terms of predictions for interest rates. In the last week and a half, we've seen predictions for increases in interest rates cut in more than half for the next 2 meetings. So we were talking about expectations of somewhere around 30 to 40% in December. We are now
cutting interest rates from like 5. I think we're at 5.25 to 5.5 or something like that. It's just
we're
cutting
at 5.25
it down to 3
to 5.5. Well, so right now, expectations heading into December, up until a week ago, they were about 40% expecting a raise in December. Okay. They were expecting interest rates to be between 5.5 and 5.75. That expectation has cut in half, although it's jumped a bit today. It's now somewhere around 24 to 27%. So we're seeing a pretty dramatic decline in expectations of rate increases, and we're seeing the expectation of rate cuts starting to jump up, especially if you look towards March, May, where a week ago expectations for only a quarter basis cut, but a cut nonetheless, was originally 7.5%. We're now sitting around 23.5%. So the general sentiment in terms of potential decrease in pivot from the Fed has started to ground itself, and we're starting to see that sentiment in the market, as well as talking about printing. That being said, time for shout outs.
Yeah.
I mean, it's episode 100, so
shout out to anyone who's been around for 100 episodes. But shout out to Diamond Hands. I mean, if we are at this juncture, I feel like the prehistoric era could be coming to crypto generally, except for Bitcoin. And for anyone who has had Diamond Hands, you have learned something. And we might make money. We might have made money. I made money on DCA so far. I'm not saying the party's over. It just feels today like it is. But that's my shout out. Jarrett, what do you got?
My shout out is twofold. First of all, shout out to you boys for your come to Satoshi moments on this episode. It's been very nice to watch. I'm very happy to see it. It's like watching my children grow up. And then shout out to Jacki, who's not here but wanted to be here, got caught up in work. She's more of our institutional voice, and it would have been great for her to weigh in on a lot of the topics that we were talking about today. So shout out to you boys for getting all the way here to episode 100, and shout out to Jacki as well, who's definitely a part of this tribe.
Yeah, man.
I'm going to shout out all of our viewers, Tristan, Allison, George Pate, everybody who tunes in every week and comes to laugh with us, comes to learn with us, comes to share news that we don't even know about. and share their experiences. So huge shout out to them, and huge shout out to you guys, because we're building something awesome and we keep going at it week in and week out. So cheers to episode 100.
Cheers to episode 100, boys.
Cheers.
Thanks for stopping by. See us next week, Tuesday at 4 p.m.